So good morning, everybody. It's a pleasure for me to be with you today, for the Commission to attend such an important conference. The Commission does not often, in my view, go to the different member states to explain what happens in Brussels, because it is sometimes difficult for people in the different member states to understand how the Brussels machinery functions. So it's always good to meet the relevant stakeholders in the different member states, and I'm particularly happy to be with you today. The title of this session was Beyond the End Date. So what's going to be beyond the end date? Well, normally an easy answer would be, well, there will be Sepa after the end date. But that would correspond to a very narrow vision of Sepa. It is true that over the last 2 to 3 years, our activities in Brussels, at least in my Directorate General, focus very much on efforts to set up an end date for the migration to pan-European credit transfer and direct debit, which resulted in the so-called end date regulation. But there is much more than credit transfer and direct debit in the Sepa environment. We should not forget Sepa for cards, and we should not forget that Sepa can also be a springboard to new and innovative means of payments. But we consider that we could draw some useful lessons from the credit transfer and direct debit experience for our future work on cards, electronic payments, and mobile payments. And I will say a few words on this in my presentation. First of all, the end date regulation. As you are probably aware, the European Commission has tabled a proposal for a regulation, a legislative instrument, last December, after almost 2 years of extensive consultation with all relevant stakeholders and with member states' representatives. There have been long negotiations in the first half of this year, and just before the summer, both the Ministers of Economy and Finance and the European Parliament have each adopted a position on this proposal for regulation. They are now meeting in what we call a trilogue, which is a dialogue between the three institutions, the Council, the European Parliament, and the European Commission, to try to get a text which all institutions could subscribe to. Both legislators, Council and European Parliament, have broadly endorsed the key features of the Commission proposal. First of all, they all agreed that there should be a rapid migration end date, that it is unnecessary to fix an end date which is too distant, and that an end date should be as close as possible from the date of adoption of the regulation. There is a slight disagreement between the Council and Parliament, because the Parliament would like to have one single date for the migration to credit transfer and direct debit, while the Council agrees with the Commission's approach to have two separate end dates, February 2013 for credit transfer and February 2014 for direct debit. You have pros and cons, whether one or two dates. One single date would certainly be easier to communicate to the end users, in particular to the citizens. Two different end dates, and in particular one very close for credit transfer, would have the advantage to keep the momentum in those member states where rapid migration has already taken place. This is an area which will have to be agreed upon by co-legislators. That will probably be the very last one in the negotiation process. A second key feature that both legislators have endorsed is the prohibition of per transaction multilateral interchange fee. There is broad agreement between the Council and the Parliament. The difference, again, concerns the timing. The Council would like to have a more distant prohibition, and they have fixed the year 2018 for the total prohibition, while the European Parliament approach is much closer than to the Commission one, which would have such a prohibition all over Europe by 2014 by the end date. A third important feature where they all agree is that there is a need for additional features, additional measures to increase consumer protection, in particular in the direct debit scheme. The Commission had put forward some proposals going beyond what the European Payment Council had designed in its scheme. This approach has been endorsed by the Council and by the Parliament. They all agree that there should be clear principles on reachability, on interoperability between payment systems, and on accessibility. Finally, they agree that common standards should be developed all over Europe, in particular for the account number, the IBAN, and for the message format, the ISO XML 20022. A delicate issue remains what sort of flexibility we should keep in the regulation, and to what extent some further adjustment to the technical, non-essential aspects of the regulation should be left with the Commission or not. And this is what we call the issue of delegated powers, where the Parliament and the Council would delegate some powers to the Commission to amend the non-essential parts of the regulation, in particular the technical annex. There is some slight disagreement with the content of the technical adjustment, which could be left to the Commission, but this shouldn't be a reason for disagreement between the two institutions. Apart from that, the differences in the position relate mainly to modalities and details, even if we have to acknowledge that the Parliament has introduced a number of amendments to facilitate the transition to these new pan-European instruments by the end users and in particular by the consumers. I'll give you a few examples. The first one is a requirement by the Council, but supported by the Parliament, to allow temporary conversion facilities from BBAN to IBAN. That means that consumers would still be allowed to use the BBAN, the traditional account number, and bank would have to offer such conversion facilities to the end users. This has been triggered by the fact that in some member states, IBAN is completely unknown. There have been some major press campaign in some member states where IBAN was described as being IBAN the Terrible, which doesn't make, of course, Sepa very popular in these member states. And that's the reason why the member states ask for temporary conversion facilities to be offered to users. A second delicate issue is the issue of the BIC. The BIC is the identifier of the payment provider, which has to accompany the IBAN. And in order to facilitate the acceptance by users of Sepa, the European Parliament has asked for the removal for end users to provide the BIC, which is still there because for a very limited number of banks, it is not possible to get the BIC from the account number from the IBAN. And the Parliament has been even further than just asking the removal of the BIC and has introduced amendments requesting the banking industry to develop database where banks could get the BIC from the IBAN so as to not require end users to provide the BIC. So we have two measures there. First of all, the removal of the BIC, and secondly, the tool which the Parliament has proposed, which is this database, which might be disproportionate because we would oblige the banking industry to set up such database all over Europe just because a very limited number of payment providers cannot be identified through the IBAN. This will be probably subject to very intense discussion between the two regulators, and we hope that we can find a satisfactory solution which is not burdensome for the industry. The European Parliament has also asked for several amendments to be introduced in the regulation on cross-border payments, and there are two amendments worth noting. The first one is a request from the Parliament to lift the limit of 50,000 euro and to extend the equal pricing for euro payments above 50,000 euro without any limit. And the second main amendment is an amendment to get rid of all the settlement-based statistical reporting requirements which still exist in a very limited number of member states. These amendments are under consideration by member states, and it is premature at this stage to assess what the final outcome might be. And a final amendment proposed by the European Parliament is an amendment to ensure that all existing direct debit mandates remain valid after the migration to pan-European direct debit. This is a particularly sensitive issue in Germany, which is a very large member state using direct debit, and where there are fears that the mandate should be re-signed by the users after the transition to the pan-European direct debit, and therefore the Parliament has introduced these amendments, which is there basically to solve a problem in one member state, because all the other 26 member states have already solved the problem. So we are now in a phase of dialogue between the three institutions. The progress has been relatively slow because, as you have just heard, the institutions have other much more urgent priorities. But we very much hope that we can get a deal, an agreement between the three institutions before the end of the year. But it will very much depend not so much on the level of agreement or disagreement between the three institutions, but also on the agenda of the people who have to participate in these negotiations. So let's hope that by the end of December we have an agreement, and that therefore we can have migration to a migration end date hopefully by the spring 2014. But as I said in my introduction, I think it's good to look a little bit backwards and to see what has happened over the last 2 years, and whether what has happened could be replicated for the other pillars of the Sepa projects, namely cards and electronic and mobile payments.